We've been following news in the metals business for some time now from a mining perspective and especially from a stock specific perspective. We'll catch up with our guest in just a couple of minutes in terms of some of the stocks to watch in the sector at the moment. But just to quickly introduce the business of metals, we've been hearing a lot recently about this commodity super cycle. Yes, it doesn't just affect metals markets, it affects liquids as well and agricultural soft commodities too. But we're talking now specifically about the metals industry. Let's introduce our guest. It's John Meyer from SP Angel. John, welcome. I know in just a couple of minutes' time, we'll be taking a look at some of the stocks that you've got your eye on at the moment. But first of all, let's just touch on this subject about the super cycle that we've been discussing, possibly to be able to measure how far through we are and just how much more upside there is to go on this cycle that we're seeing at the moment.
Yeah, I think we're about it. We're through the first phase of the super cycle, as I see it, and I think that puts us somewhere between a quarter and a third of the way through it. So we're probably at the end of the beginning, so to speak. We've had a good run in metals prices, driven by demand, driven by anticipation of future demand, and driven by lots of stimulus funding, which is still coming through. We're still seeing new projects starting. We're seeing lots of activity with excavators coming towards an end, actually, and pumping machines that pump concrete. But what we're also seeing is that with lots of construction projects having gone through those early foundation forming stages, that they're moving into the next part where these buildings require building from the ground up. That's lots of steel, lots of copper for the electrics and the plumbing, lots of other commodities coming in for the fitting out of these buildings, offices, new apartments, particularly in China, for the millions more people they want to draw out of the rural environment and into urban centres, new urban clusters, new transport facilities to link those urban clusters to bigger cities, including intercity type networks and that sort of thing. So there's still loads going on. Yes, China is touching the brakes slightly. It's trying to slow down some of the heat in the property market there. Yes, COVID is very much an issue in Asia at the moment. We're seeing 300 cases in one region of China, because China's been very good at holding this back. We're also seeing other parts of Asia suffering. The new Delta variant, which has come from India, causing problems because that was said to be 40% more effective than the Kent variant. And of course, remember, the Kent variant was more transmissible than other previous variants before that. So this isn't a disease that we're stopping in a hurry. It still continues. Okay, we're beating it with the vaccine, but remember, not everybody in the world has access to the vaccine right now, and it's still going to take a while to roll that out.
I'm interested now to take a look at some of the stocks you're watching, and looking through the list, I'd like to start, if I can, in the business of tin. We have in the past spoken about the potential resurgent tin mining industry in Cornwall. Of course, once several hundred years ago, this was a massive business, and when we know that all the easy tin has been exhausted. But I know also as well that with this uplift in prices, and I think this goes across the board, doesn't it, around the world, when you get an uplift in prices, it makes some of the previously uneconomic seams of materials now economic to mine again. And I know that Cornwall comes into this bracket. Let's take a look at the business of tin with one particular stock at the moment.
Well, we're working with Cornish Metals, and we act as nomad and broker to them. They made a new discovery. Well, in fact, they didn't make the discovery. Cornish Lithium made the discovery for them, but it was on their license, which is very lucky for Cornish Metals, and they drilled into high-grade copper and tin. So what's so exciting about this is the high grade of copper as well as the tin grade in there, because it means the value that hopefully will come out of the ground here in future years to be somewhat more than might have been anticipated. Very interesting location because it's very close to a decline that was put into a nearby mine called Wheel Maid. In fact, we think that decline runs within meters of where the discovery was made. So Cornish Metals are currently drilling this discovery right now, and I've got my fingers crossed. I'm hoping that they're going to hit more tin and copper. I certainly hope so, because they kind of know where it is from the first couple of drill holes put in there. by Cornish Lithium. Very kind of those guys to do that. And they've also owned an old tin mine called South Crofty, which is in fact where I started my career as a young mining engineer, as a student down in that mine. And that mine is flooded and so needs to be pumped out. But the great thing about what Cornish Metals are doing is if they build the new processing plant at the South Crofty site, which is quite close to the new discovery, they'll be able to use that when they've dewatered the South Crofty mine. So you'll get effectively two mines almost for the price of one. And I like that kind of risk going forwards.
As Nomad and broker, are you able to give a price target?
We don't have a target on it right now because we don't have enough to value, but the company put out a new resource statement for the South Crofty mine today, which is something we could start to hang our hat on from in valuation terms. But if we look at a proxy company like AfriTin, I think it would give investors some idea of where these things are going. AfriTin is mining a low grade, and it's quite a different type of deposit. But they're mining that out in Namibia, and they're already up and running. They've spent the money on the development and on the kit, and they're ramping up their production. They're not a big scale producer at this stage, but that will grow. And it's a well run business, good set of people in there. So that's at least two tin stocks for people to look at in the London market right now.
Amongst the other stocks as well I'm interested in is what's going on in the industry of diamonds. We don't talk an awful lot about diamonds and diamond mining, and you know that diamonds actually fallen out of favour with some investors. But you've got BleRock Diamonds on your list of stocks to watch at the moment. Why?
I like BleRock, and I'm actually planning on buying some shares in this when I'm allowed. It's that they're rebuilding their production plant. They're going to ramp up to hopefully 1 million tons a year of rock to process. That should give them about 30,000 carats of diamonds a year. Those diamonds sell roughly for about $400 a carat at the moment. But I noticed that De Beers are ramping up diamond prices. If you think back to the subprime crisis, often referred to as the global crisis, the GFC, global financial crisis, diamond prices actually went up after that, as we didn't have a lockdown situation, but there was a lot of financial distress in the world. And when we came out of that, I think it was a result of stimulus funding, a bit more cash in people's pockets, that kind of thing. Diamond prices actually rose quite strongly. Now we're starting to see this again. De Beers have put up prices of diamonds in certain categories by 10% this week. I think we're going to see more of that. I think we're going to see a rush of people buying diamonds for their loved ones. I know two guys who I'm quite close to who have done this themselves quite recently. So although it's difficult to organise weddings at the moment in the UK, I think there's going to be quite a lot of, shall we say, pledges given and diamonds being acquired. So yes, I see this as a growth area, and I actually see BleRock Diamonds as a good quality business to get involved with. It's had its issues in the past.
I was going to say current share trading there was around about just over 40 pence. Much upside then. I mean, you can see from the chart here that just a couple of years ago we were up at 140 pence. So it is it's been knocked down quite considerably.
Yes, it's had its issues in the past, and they've had quite a lot of trouble at the mine, usually with the weather. But what they're doing right now is they're building the process plant to manage the rainfall. They're starting up a third pit in effect, so that will give them a few more options in terms of mining, gives them more flexibility, more security. This is an issue we see with quite a lot of companies actually. So once that's all in place, I think the stock should take off because I think production will rise a lot.
Let's talk about copper. One of the big areas I know, and we've been talking about the price of copper recently as well in the LME. Of course, it's been flirting with this 10,000 level for some time. It did almost rise to almost 10,000, 600 or 700, I think, at one point, wasn't it? But the price has pulled back a little bit. What about stocks in the copper space?
Well, it's good to see the copper price bounce a couple of days ago and carry on going. So although there was a bit of negative news in the market, I think it was more driven just by possibly Chinese government agencies trying to reduce metals prices. We think that's a game they play from time to time, but I think the demand is there, and the price of copper is quite resilient. So looking at some key copper stocks in the London market, Rambler Metals and Mining, it's another situation where we're seeing the reconfiguration and rebuilding of restructuring of a mining camp. This is out in Canada, so the political risk is very low. The mine is ramping back up towards 10,000 tons a year. I don't think it'll quite make that number next year, but it'll be highly profitable at these levels. And yes, in the same like BleRock, they're going to have to develop some other working faces in the mine in order to make that production more flexible, in order to achieve the production rates that they want on a consistent basis. And then I think they'll ramp up beyond that 10,000 tons a year mark. And so I see Rambler as a good quality turnaround situation for investors to buy into. And I've bought some shares in this myself because I see that's how it's going to go.
But I mean, this has been beaten up. Markets like to price in future opportunity. There doesn't seem to be much opportunity in the share price if we look again at the share price chart from where we are. You talk about the opportunities here, but what the shares are far lower than they were 2 or 3 years ago, substantially so.
So as part of the financial restructuring, where they got rid of a lot of debt that was sitting there on the balance sheet and different convertible type instruments, so they issued a lot of equity to get rid of all that. That means the company is now virtually debt free. There's still a little bit of a lien on there, which some people refuse to accept the paper for. So I think the company now is well positioned to push ahead, and it's not held back by some of those debt holders, and that's a nice situation for a smaller company to be in.
How about some of the other copper choices at the moment?
Well, if we look at SolGold, very different type of story. They're looking at producing 800,000 tons of copper concentrate. Now, of course, that's not all copper. It will reduce down to about 30% of that, but a huge project. And a much bigger market cap to go with that. Now, the difficulty with SolGold was that the main ore body for the Alpala project is relatively deep. You don't start getting into the copper till you get down to about 800 meters. The good thing is they've discovered another copper ore body closer to surface, very close by, and hopefully that will kickstart the project. Now, again, this is a huge project. It's going to cost billions of dollars to get this into action. Now, the company is backed by BHP and Newcrest, and so those big boys are currently looking at this and trying to figure out how they pull the project together to make this into something that's workable. Now, remember, it's in Ecuador, where there's not a lot of mining going on at the moment, and hopefully Ecuador will be friendly towards mining companies going forwards. And the other bit about SolGold that I really like is the exploration portfolio, because they were pretty much one of the only movers and shakers in Ecuador a few years ago. And they went around securing lots of mineral licenses, having made the Alpala discovery. They then said, well, let's go and see what else we can find. And I reckon in future years, actually, the main project at SolGold is not necessarily going to be Alpala. It'll be one of the other projects that I think will take over and take the lead in terms of going forwards into copper production.
Talking about copper production, another stock you've got on your list of copper companies is Strategic Minerals, which is already in production, isn't it?
Strategic Minerals produces magnetite, which is iron ore out of the USA. So that gives it cash flow to pay for the corporate development to a certain degree. They are developing a couple of old copper mines and doing some dump retreatment in Southern Australia. So that's small scale. They're still looking at joint venture opportunities for the funding of that, but I would expect those guys to be in production again on a small scale basis, a little bit less than Rambler Metals, in the next year or two. So very quick to start up, very low cost, and I think with opportunities for expansion. So I quite like Strategic Minerals. It feels a bit unloved at the moment. It feels like it's been forgotten about, but I think there is opportunity in there for the braver investor.
What What about the area of rare earths? What should we learn from what's happened there and the potential for this particular sector? What's your pick in that sort of area?
Well, we can see the US government has just set up what they call a strike force. Sounds like something rather aggressive. And those guys in the strike force are going to be looking at the importation of or the dominance that China has in the permanent magnet market, because permanent magnets are critical for all sorts of defense applications, for wind turbines. Offshore wind turbines almost always have permanent magnets in them, because it's very much more efficient to generate renewable electricity in a windmill if you're using a permanent magnet in the turbine. And the average weight of a permanent magnet in an offshore turbine in the UK now is about 7 tons, and a lot of that is neodymium and praseodymium. Those are critical rare earths, and we just don't know where it's all going to come from. So companies that are heavy in these heavy rare earths are Rainbow Metals, Macango, and Pensana, which are all listed in the UK. There aren't that many others around the world that look that good. Rainbow looks particularly good with its Palabora project in South Africa, and it's already producing rare earths in Burundi in Africa as well. So whilst they're sorting out a few issues in Burundi, it is a small African state, and the mining that they do there is from narrow veins. In fact, it's the world's highest grade rare earth mine, so it has lots of potential for expansion. And the CEO there, George Bennett, is working hard at mechanizing that mining process to make that work more efficiently. But I think the real value for this is going to come out of the Palabora project, where it's a retreatment project for retreating phosphates that came out of an old phosphate mine. Those phosphates are in, or shall we say, the tailings from those phosphates are in chemical form. With the rare earths, what that means, it'll be much easier to process the rare earths out of that. And they're just checking through the processing flow sheet for that right now. And my modeling of that sees quite a lot of additional value to come out of Rainbow, well, hopefully in the next couple of years.
Just want to follow up on the final stock, and this is a stock I know that amongst investors and on the IG investment channel that we have a lot of interest around BlueJay Mining. Now, this is a company that's interested in ilmenite. Up until a couple of 3 or 4 years ago, when we first spoke about it, I hadn't really got into ilmenite. I wasn't really sure what it was all about, but I became more and more interested in this project that BlueJay Mining has got. So let's end on BlueJay Mining as a stock worth watching.
Yeah, it's interesting because in many respects, we thought that the price of ilmenite, which is the pigment used for paint, so you turn ilmenite into titanium dioxide, that then provides the opacity for paint, so it's a critical ingredient. And with the world locking down, everybody thought, well, this market would collapse. But the reverse happened, in fact. A lot of people who went into lockdown ordered a lot of paint. So there were queues at DIY stores for people buying paint just ahead of the lockdown, and then a lot more people bought paint online, and that has continued. So the paint manufacturers have been going full belt. The guys that supply the titanium dioxide to those guys have been going full belt as well. All the world's surplus stocks have probably been used up almost entirely, and ilmenite prices are rising quite well and quite consistently. So BlueJay, which has already agreed an offtake for 70% of its planned ilmenite production, and again has, we think, the world's highest grade consistent ilmenite at its project in Greenland, is kind of getting ready to go. So we're just waiting for BlueJay to put together the debt financing for the new mine, the Dundas mine up in Greenland. They're planning on doing about 440,000 tons a year of ilmenite. That's a decent chunk when you consider global markets, but it's not too large. But when you consider the amount or the current demand for paint, pigments, and the underlying ilmenite, I think that's going to be relatively easy to place the rest of that into firm hands. So we've got an idea of where this is going right now, and I don't think it's going to take too long to finance the mine. Very good support from the Greenland government. I expect to see great support from the Danish government and from the EU in this project, because it helps with the economic development of a relatively poor and sparsely populated area of Greenland. In fact, it's very close to the American air base at Thule up there. So although it's remote, it's not so remote as to be completely devoid of infrastructure. So you can get around up there. In fact, it's very easy to bring ships into the site for the importation of machinery and for the export of the ilmenite. In fact, they exported 44,000 tons a couple of years ago, just before everything locked down. And demonstrated how easy that was. And I actually think this project is going to be worth something more than what the management think it's worth, because I think they're being rather cautious in some of their numbers, and because the quality of this ilmenite is so good, and it's taken me a while to really understand and get confident in that I think they'll be getting premium prices for a product which looks nice when you put that into the modelling.
And they've got a very well-known and rather large friend, haven't they, in Rio Tinto? A number of joint ventures, I think, with Rio Tinto, haven't they, on projects at the moment? Rio Tinto, I think, has one of the world's largest ilmenite projects, doesn't it? So it fits nicely, doesn't it, as I say, as a friend to have in the business.
Rio Tinto have a big ilmenite business, but not just at Rio Tinto Iron and Titanium in Canada, which is looking at running a smelter test on the ilmenite concentrates from this mine. But also they've got operations down in South Africa at Richards Bay, where they've had quite a lot of trouble, people being murdered and that sort of activity down there, which does not sit well with a company like Rio Tinto, which shouldn't sit well with any company, frankly. And other operations up in Madagascar, which again is a slightly difficult and challenging place to work, partly because of the environmental issues and partly because the government is not entirely conventional sometimes. So yes, I think BlueJay is well placed up in Greenland, and the great thing is the quality of the ilmenite product is really good from an international sales perspective.
Okay, John, look, thanks so much indeed for running around some of the stocks of importance within the mining sector. It's good to catch up with you again. Thank you for your time.
Thank you.
That's John Meyer. He's from SP Angel, taking a look at some of the stocks in the mining industry at the moment as we continue to monitor this upward move in the underlying metals prices. For more videos like these, follow us on Twitter and Instagram and subscribe to our YouTube channel.